Hello and welcome to Wake Up and Smell the Mic S&P 500 review for Friday, June 2nd, 2023. It's now 5 a.m. Central Time. We start off in the S&P 500 daily chart in DeMark looking back to end of December 2021. I'll zoom into the current area now. The S&P 500 daily chart has printed the combo and sequential sell setup 4 count. And to negate that for end of day today on the 2nd, there must be a close below 4205.45 for the price flip to the buy setup count 1. And price in the pre-market hours for the S&P 500 at 5:04 a.m. on the 2nd is 4240. The ongoing supply line was qualified by exceeding its level there and closing above it, and if it closes below it for today on the 1st, it will be qualified cancel. It could become qualified and confirmed with an open higher than this close and tick higher than this high and close higher than the close. The qualified and confirmed propulsion exhaustion up for 50% was almost tagged yesterday with this high here and the level here. It looks like if things keep up in the pre-market that will get tagged. So above that again is the upper Stark band and the channel 3 high traveling pretty close together, and if the close can remain above the close of this qualified supply line level, then that will be at least qualified, and then this qualified supply projection will become negated and we'll get a new one somewhere up here. My guess was right around the relative retracement up to, which is our goal. And I heard or read somewhere that the S&P 500 has the most shorts on it in history, or very close to it. So once everybody starts covering those shorts, this will get up to this relative retracement up to rather quickly. Head south, and the conversion line and Stark band mid-band are traveling very close together, right on top of each other. Pretty good support. Underneath there is the Ichimoku baseline, very good support. And keep going under there. The trend factor disqualified down 1 has bumped up slightly to that level, and then there's the ongoing demand line, and a close below that will qualify that level, and it's pretty much right on top of the Stark band lower band, and right under there is the channel 3 low, and then the disqualified momentum down is a target. And here's a look zoomed out a little bit. You can see that the C3 and the megaphone cell 6 end count has shifted over to this new high over here. And the NASDAQ 100 NDXHILO chart has given the sell signal again by having the blue 5 EMA cross under the red 10 EMA and having ROC 12 plus or minus 5 here, so negative 3.75. And this whole area here since the beginning of April or so is the most indecision period on this chart in history. So there's been a lot of back and forth, buy, sell, etc. So I still get on with the bandwagon whichever way it's going, so we'll have to start shorting the Qs a little bit here, which could be troublesome as the intermediate term KST has gone above its signal line right here. It's still below zero at negative 0.62, but nonetheless above the signal line. And the short-term KST is hooking around to the downside, and the long-term KST shows no indication whatsoever of pulling back on the stick. And the NASDAQ composite and NAHILO, what can you say about the NASDAQ other than it was the laggard for a very long time compared to the NASDAQ 100, and now it's leading the way with a lot of strength. Here, as we can see, that rainbow pattern is really good looking, and the blue is just giving the slightest indication of leaning to the right a little bit, but still not very worrisome. And the ROC 12 is well above zero at 49.06. And the long-term KST has gone above its signal line. Looks like yesterday that happened. And it's still well below zero, but nonetheless a good indication for the long term. And the intermediate term KST has crossed its signal line several days ago and headed straight up. And the KST for the short term, really not much change. Still a very pronounced rollover, but really hasn't been following through to the downside here. And the New York NYHILO, NYHILO, is still looking rather pitiful here. Blue below the red and blue below the 21. Quite a gap between the gold 21 and the red and blue. And the short-term KST has gone under zero here after crossing under its signal line. Intermediate term and long-term KST, not much change, maybe a little bit more of a pronounced downward trajectory on the long-term KST. The S&P 500 support and resistance levels big board chart shows the gray areas at the qualified and confirmed 50% exhaustion up. The top of the super bullish wedge, horizontal support right together. That's the top of the range. The weekly high channel 3 measure from pennant breakout. The daily Bollinger Band upper band R1, and the top of the broadening top pattern, which looks like it's going to break out to the upside from, and to the downside looks like we stay in the 4200 zone exclusively. The weekly 2018 broadening top in dashed red, and ongoing supply line, which it needs to stay above, so a close below this level for today will qualify, cancel that, and the pivot point. And by qualify, cancel this ongoing supply line means we will not get a new qualified supply line projection like this over here, so this will stay valid and will be the only one on the board there. The S&P 500 daily AD line is still below its 21 EMA signal line, and the daily NASDAQ 100 AD line is still below its 21 EMA signal line. And the ROC 1 almost closed above its positive volatility line, which is at positive 1.0, closed at 0.99 positive. ATR2 is out of its low volatility zone and up into the volatility zone, and that line is at 50, and ATR2 closed above it at 51.84 and pointed up. and the PPO extreme took a nice leg up. It's getting closer to the PPO level 4 here, and the New York traditional McClellan breath oscillator to get back to zero would require 425 decliners over advancers to get back to zero, so it's now above the zero line. Have a great day.